Hello, forest traders. Hello, forest traders. It's nice to be with you guys now. Happy to be with you guys today. Like from my previous video, all of you who told out my analysis saw that they all played out to the teeth. I'm always right with my strategy, with my trading style. So if you have been following me, you will understand that what we stay here is the real deal. So today, what are we going to be talking about in this video? We are going to be talking about how we can trade gold in 2026. Gold prediction. My gold prediction for 2026 is gold going to $10,000 per ounce. What is my prediction? How can you approach gold market in 2026? You understand with me that the dynamics of the forex market has changed this year. Be because of the outbreak of the AI, artificial intelligence, and the recent happenings in the world, like the wars all over the place, the tussle between the world powers, the dynamics of the forex market has changed drastically. So if you have been trading the traditional way you usually used to trade, you have to understand the dynamics, the new dynamics of the forex market. So today we are going to talk about how these new dynamics of the forex market has affected trading gold. As a professional traders, you want to be known with what is going on in the world. You want to understand what is actually going on in the world. You don't just only pay attention to the technicals. Yes, the technicals is the real deal, yes, but you also need to understand fundamentals. You also need to understand what is actually going on in the world scene, because most times what goes on in the world scene are what actually drives the forex market. People react with events in the world. So how has that got to do with gold? How has that affected gold? You agree with me that gold has has rallied. Gold has rallied, and gold has gone up, made new highs, broke new highs, made new highs, made new highs, and gold is freaking freaking expensive right now. We are currently trading at over 5,000 plus per ounce gold. So So you can see $500 per ounce gold. You can see that gold is very, 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 very expensive right now. So that should affect your trading. Before, when you take a trade in gold, just a little bit this for you to get 100 pips, they are gonna be distance. But now, just a small, very small move is capable of giving you 100 pips in gold. And this has caused a lot of accounts to be blown, because if you don't have enough liquidity, if you don't have enough money in your trading account, you will find out that you will quickly blow your account now trading gold. Those of you who have been trading will understand what I mean by this. Gold is really, really expensive. So how should you approach gold with the recent happening in the world market? How should you approach gold? Well, I'm going to describe to you what is going on in the forex market, and I'm going to describe to you how that has affected trading gold right now. So for those of you who like trading gold, you'll be in a better position to understand. So before we move to the nitty-gritty of the day, before I share my screen right now with you guys, I want you to take this time to like, subscribe, and share. Please share this channel to your friends, especially those who are trading, who have been struggling in the forex market. We are here to give you the real deal. So you are welcome inside of my screen. This is Living on Forex Life and Direct. So I will be going try today. We're just talking about gold. So I will not be doing any analysis apart from gold. So what you're looking at currently is the gold chart. So let me pull out this stuff out here. Pull out this stuff out here. Pull out this stuff. So before I move to the technicals, before I move to the technicals, I want to give you a background on what you should be expecting trading gold this period, what is going on in the world market. Okay, that is what will actually guide you. That is what will actually help you and guide you to know what you should be doing. Now, you understand that the traditional way of trading gold before that we all know, it has shifted. Before, when you trade gold, hmm, when uh, when dollar, when the US dollar appreciates, when the US dollar strengthens, this will affect gold. Gold will start selling. But now, you notice that even with when the US dollar appreciates, maybe inflation, interest rate is being heightened, which usually makes the dollar to be strengthened, gold still goes up. It doesn't still affect gold. It doesn't still crash the price of gold. This will tell you that the new gold is now operating on the new dynamics in the market. As of February 2026, gold is trading near $5,000 per ounce gold, having recently recovered from a massive a massive crash in late January. Today, you must balance technical precision with an understanding why the traditional rules that we usually know in the forex gold market have changed. Now, what do we know or how do we trade gold before? We want to understand the 2026 dynamics now. The old correlation where gold goes down when the dollar goes up has weakened. Anytime dollar goes down, gold goes up. That traditional way that we usually know how to trade gold, that's how we approach trading gold before. That correlation has gone down come this year, 2026. The current price action is driven by central bank accumulation, like global central banks like the one in China, India, and Turkey. They are buying gold as a structural necessity to diversify away from the US dollar. This has usually created the price floor for gold. Even when interest rates are high, gold still goes up. So because China, India, and Turkey, they are buying gold as a reserve naturally. So they want to diversify from accumulating the US dollar, thereby making the US dollar to be strong. So they are diversifying into gold. So that is why even when the US dollar now is strong because of maybe CPI or interest rate cut, it doesn't affect the price of gold that much. Price of gold is still on the bullish side. And now gold is really, really expensive. Gold is currently trading at 5,042 per ounce gold dollar. So this is the new dynamics because, and that is why when you notice in the Asian market, you see gold highly volatile because this in the Asian market is the country in the Asian side that they are accumulating gold like China, India. These countries are accumulating gold as reserve. That is why when you open your chart during the Asian section, you will notice that gold is moving, like moving. So you don't need to wait. You don't need to wait any longer for London section, US section to have an entry when you want to trade gold. You can have an entry in the Asian section because gold moves massively. They make use of gold in their transaction. They store gold in their reserves and all of that. They are diversifying uh, from the US dollar to put their money in gold as reserves. So this is the reason why gold is surging. And apart from that too, the uncertainty in the world scene, like the wars that are happening, Russia fighting Ukraine, Iran, this other country, Israel fighting Gaza, and all of that, all the wars in the world. Whenever there is uncertainty in the world, people tend to put their money in assets like gold, in some commodities like gold, because this is what will stand the test of time. They remove their money from currencies and put in gold. So the combination of these two factors has made gold not to crash. Even when the new Fed chair was elected, this is when we saw this crash in the late January. But then after the crash, what happened? Gold still bounced back. Gold still bounced back. Now, if you notice the NFP news that came up on Friday, let me pop up that. The NFP news that came up last Friday, was it last Friday or Thursday or Wednesday? Let me check our calendar. Okay. NFP news on Wednesday, February 11th. Look at this. Average hour earnings. It was very good on the dollar. It was good on the non-farm payroll. It was also nice. More people are being paid. Okay, we have unemployment rate reduced from 4.4% to 4.3%. So these three news that came out was very good on the dollar. It shows the strength of the dollar. But what then happened, guys? I want to shock you that they usually before now, when this kind of news comes out, gold surge, gold fly to the bottom. Gold will just drop. But that drop did not come. When the market did this, when the market did this, this was not that news, and this was not that. And that news came up on February 11th. It was around here. Okay, this was this red candle that came aggressively, and then after that, what happened? The market pulled aggressively back up. So it didn't affect. It just made that news. They just used that news as a pullback to continue the move. This one you saw, this aggressive one was the election of the Fed chair in late January that made this sell. And we all felt that okay, US dollar has gotten strength because the market makers read the signs to be okay, it was good on dollar, people were buying dollar. But what happened? It crashed again, touched this level, and then the market has gone up back. Almost half of that move has been taken back. So we saw that gold is not ready to start the sell-off. Gold is not ready to start. So with these fundamentals, with this knowledge of fundamentals, you're almost 50% certain of where you should expect trading gold, the direction you should be going, whether buying or selling. Because if gold wants to drop, would have seen that drop after these massive aggressive moves. Gold will still drop. But they are maintaining this 5,000 above this 5,000 psychological level. Gold is trading above this 5,000 psychological level. This 5,000 psychological level. So it means that gold is not ready. And if you look at the daily candle, this candle that dropped and this one aggressive coming back, it shows that the buyers are still strong in this region, in this 4,900 region. Okay, let me go down to the lower time frame. Okay, this level, we saw this pullback and then the market came on that February from that NFP news, the market dropped, tested this level and it's going back. So you see that the gold is not ready to fall. Despite this move, the market gained back half of that move right now. So if I put up my Fibonacci retracement from swing low, some who are trading Fib will say, okay, this is 0.6 level currently where the market is. But I want to tell you that you can only use this stuff the right way, not using it to measure direction, please. People use it as a reversal to know when to, but it's not always encouraged to use it as a reversal. It's encouraged to use Fib during a phase of pullbacks to join the trend. So the overall trend when you're trading gold, we all know that gold is bullish, it's coming up. Now, how should you trade gold come this 2026? That is the nitty-gritty of the day. Now, my best approach of trading gold is to wait for gold to come to zones. What did I say? Zone. And mind you, this is not for $20 traders. This is not for people who have $20, $30. Please, if you want to trade gold with your 0.01, which is the micro lot, you need to have at least $50. Unless what you want to do is you want to gamble. You want to try your luck. Because gold is freaking expensive this period. So a little spike, and gold does that a lot. A little spike takes out your $10, your $20 out of your account. You'll just be surprised. Let me shock you. And if another thing I want to tell you now is if you want to trade gold, please, you have small account, anything less than from $100, anything less than $100, please don't go. You don't have business with the daily and 4 hour time frame. You don't even have business with the 1 hour time frame. Now you can use. I'm not saying you shouldn't come and check those time frame. You can use those time frame to check your direction. But please pick your trade in the 5 minutes. I'm not a fan of lower time frame, but I'm telling you this. This is the way if you want to approach gold and make profit. Because what you will do without your small account is hit and run. You don't need to come and stay in the trend. Guys, gold does a lot of spikes. So you imagine when you are in a trade and you're a profit, you will just immediately you will see $15 in profit. You will see $15 in profit. But that $15, you just once go do this spiking it does, that $15 will turn to -$7. You'll be shocked and the move. You just see small move, but it has taken that large money from your account. The reason is because gold is really expensive and it's becoming so expensive. So the spread are becoming too tight and the moves, small moves will give you large money. So if those moves are in your favor, you make a lot of money. In fact, with gold, if you can hold, if you are able to hold this from here to this level with a micro lot, I'm telling you that, let me tell you how much you should be making from this, if you are taking this trade for just this one candle that spike from here to here. This is over 230 something pips. Okay, so this with your micro lot size, just this move from here to here, if you are able to hold this market from here, the way it spiked from here to here, guys, you make $239 in with micro lots, with a micro lot size. That is how much you will make. Micro lot size, you will be making 230 something dollars. So you can imagine that. You can imagine that. So you see how expensive gold is. Before this move cannot give you that amount of money, but now it can because gold is really expensive. So, but for you to hold this market, if I go to the lower time frame, you see all those small spikes that happen. You will not be able to hold if your account is like $20. It will be very difficult unless it's just a straight move as a drop, one candle. That is when you hold. But if it's making the usual impulsive retracement while coming to that level, you'll notice that sometimes you'll be in red, that you'll be scared that your account will be blown. You close the trade, only for you to come back and see that the market has hit your target. And what result? Okay, look at all of that move. Okay, it was a one candle drop. So if you hold this trade with this one candle drop, then you will make profit because it's a one straight move, aggressive move to the bottom. But if you are holding this trade in a buy side and maybe you want to target this level from here, you notice that all these retracement, all these spikes will take your profit to loss. And then you'll be scared and go out of the trade, only for you to come back and see that the market start going in your favor. Gold does this a lot. So how should you approach trading gold? My recommendation, one, go to the direction. For you, the direction I recommend is more on the bullish side. Right now, we know that gold has been on this range since February this year, February 3rd. It has been on this range, hit here, and then broke it, goes back into the range. Now gold is currently trading in this range. But from what I'm seeing, guys, gold is coming to break this level, 5,100 level. This level, this my bar here. Gold is, and if gold breaks this level, as you can see from the left side, nothing is stopping it. Gold is actually coming to this level here, this general high, which is over 5,600, 5,600 level. It's gonna rally to that level. If gold breaks this level, this 5,100 level, it will go to 5,600 level, and that is over how many pips? That's a massive. For those who can hold this trade, you're going to make a ton of money. That's going to be like 426 pips trade. Some people will say 42,600 pips, depending on how you're counting your pips in gold, but it's over 400 and something pips, and that is massive. Even if you're using a micro loss side, that's going to give you 400 and something dollar. So you see, so my number one recommendation, trading gold 2026, the fundamentals are showing that gold is not ready to drop. It's not ready to do the sell-off, despite the fact that we have seen a little bit strength in the US economy, and yet it's not affecting the price of gold. Whenever you see a news comes out that is supposed to move to a certain direction and they are struggling to move to that direction, just expect that that is not the direction that that pair wants to go. Take this from me. This is a top secret that I teach from my advanced course, but I'm giving it out for you for free. Whenever you see let's say a news comes out and the market is supposed to go a certain direction based on the data that was established, that was released from the news, and then the news is not going, the market is not going to that direction. Maybe it went and spiked and came back aggressively. Just know that that is not the direction they are going. They are going to the next direction. Whenever you see a market in a range, spike below or above that range and goes back into that range, know that that is not the direction. Know that the direction is opposite. All of this fact is what you want to know. So for gold to have come here, did this spike below and goes back into this range and is currently trading inside this range, this is telling us that gold is going to break here. And if you look at the way it's moving, it's showing that strength is coming up. If you pull up the volume in the volume indicator, you will notice this and this. You see volume. Volume has increased from a low volume, and then this is the candle that gave us that volume. So we see that whenever you see a volume there, it shows that institutional traders are on that direction. There are more orders going on the buy side. So you want to be in that direction. So what you need to do when you want to trade gold, if you are looking at the 4-hour chart, 1-hour chart, you can use those time frame for your direction, to know your direction. But where you should be picking your trade, for those of you who have a small account, come to the 5 minutes, 15 minutes max. 5 minutes. Some people trade the 1 minute, but I don't really recommend, even if it's good, I don't really recommend the 1 minute because the 1 minute is just full of noise. I don't like that. Normally, I don't even go to the 5 minutes in my trading. You all know, guys. But because of all the trend that is happening with gold, like I told you, as a trader, you have to be dynamic. Observe the new trend of the market, follow suit. That makes you a profitable trader, and that is what will make you last in the forex market for a long time. So, but with what is going on in gold, if you want to trade gold with your small account, any account you have from $100 and below, please come to the look at the 4 hours, 1 hour for your direction, then plot your levels correctly with the 4 hour level. At least the 4 hour level holds very well. As you can see, this is the 4 hour chart. The level is holding here, the level is head here, and then the level also head here. So you see that the 4 hour level is a strong level. When you plot your direction in the 4 hour level, but you want to look for your entry, you can still use your 1 hour to plot your level. But when you want to look for your entry, you come to the 5 minutes. You use your 4 minutes to get your level. You can use your 1 hour to get your patterns, your structures, your patterns. Then if you see a pattern forming in the 1 hour, 15 minutes, you can use 1 hour and 15 minutes for your levels. Sometimes you use 1 hour for your levels, then you use 15 minutes for your pattern, your structures. But if you use your 4 hours for your levels, you can use 1 hour, 15 minutes for your structure. If you use 1 hour for your levels, you can use 15 minutes, 30 minutes for your structure. So depending on the one you are using for your direction. So when you plot your levels, either you use a 4 hour to plot your level or your 1 hour to plot your level, look for a structure. Before the market reverses in gold, it usually gives you the structure, a structure. And most times, the best structure you can actually get from a lower time frame is the head and shoulder structure. I this always happen. I'm giving you this free of charge. 5 minutes, you see the head and shoulder structure. Just get the right shoulder and plot. And once the market spike above that right shoulder and comes back, showing you rejection. If it's a sell, you put your trigger and the market will sell. If you watch of this chart now, do you know I picked this trade in this level? Now let me show you how I was able to pick this trade in this level and this sell, all this sell off. Though I didn't hold the market for the market to reach this level, but I put my profit, I took my profit out, but eventually came back to see that the market actually hit this level. But however, I still ended in profit. Now, all of this consolidation, I was in this. I entered this market during this consolidation. This is where I entered this market. Now, why did I enter the market? I saw this this level holding. When the market spike above, as if it's breaking it and came back, did this spike, did this next spike, drag down. And then when it comes back to this level, it started ranging, see this consolidation for a long period of time. When the market did this spike here and entered back and came back there, that was when I entered this trade. I entered this trade and held this trade with all of this consolidation. Then the market did this last liquidity grab, this last video, and then spike a little bit before the major news came out. So when this market did this spike, when the move started happening and this all of this move, I was able to grab this move. When the candle closed, the candle closed around here, I closed my trade. But this was supposed to be my overall target. But I closed my trade. Market did this retracement and came back aggressively to smash the TP. But then I was already out on profit. I was already out on profit. This is, I'm just showing you that it's going to give you a structure. Are you not seeing the M formation? This is M formation. This information. So God will usually give you a structure before reversing. So watch out for those structure and always wait for the spike. The spike against that level and comes back. If it's bullish, spike below that level and comes back, then confirmed. If it's bearish, spike above that level and comes back. Spike above the level and comes back is confirmed. So always wait for that spike because gold will definitely give you that spike. But if you enter before the spike might blow up your account before going to your direction. So you want to be patient. Sometimes to do as if the order want to start, the direction want to start moving, it will go a little bit, but it will still come back. If they are not, they will come back to spike. Once they spike, that is when you should pull your trigger. That spike is the confirmation of your trade. You can see what happened there. This spike. Once this spike did this, came back and coming back as if it just tanked. So that is how you should approach gold trading gold 2026. My recommendation as a way of recap, trade gold with a lower time frame for those who have small account. For those who have $1,000 and above, then you can now go to the higher time frame, but always use the 1 hour as your entry. When you do that, you're going to make a lot of pips, but you have to be patient. When the market has confirmed your movement, stay on that trade. When the market has broken on a level, move your stop loss to break even and allow the trade to go. The reason is because you are going to make massive profit. Just a 4,000, a 100 pips with a mini lot size, that's over $1,000 if you're trading gold. Just and these 100 pips can be gotten in just 1 or 2 candles. I'm telling you, with what is going on in the gold market right now. So if you have a large money, you can make good money from it from gold from a trade in gold. And this trade you can hit your TP in a day. In a day, you will just make $1,000 with your small $1,000. You can double your account in a day if you have the direction correct and your trade entry is top notch. But for those of you who have a small account, $200, $100 below, and all of that, go use the micro lot size and use a smaller time frame. You will still make money and you will stay long in the forex market. So combining the technicals, and the fundamentals, we are going to see how you should approach trading gold. This is not the time you look at US and say US is strong, so the gold will start selling. No, always look at the charts. Once the fundamentals are try to correlate it with what is going on in the chart. If the fundamental shows that dollar is strong and you come to gold and you're not seeing strong sales, just know that that is not the direction. Whatever sell you see there might be spike. Once it does sell and spike, know that that is not the direction they want to go. If a major news like CPI, NFP, and all of that interest rate news comes out, or maybe if the Fed chair is speaking, those are the news that have high volatility. When the Fed chair is talking, or CPI news, NFP news, these are the news that cause massive aggressive move in the market. When these news are coming out, maybe it's showing that it's showing favoring dollar, and then you come to the chart, the gold chart, and you're seeing that the gold is not selling, which you are supposed to be selling based on the news. Just know that that is not the direction. Just know that that news will just do a spike, sell spike, comes back, and then start buying. And this is what has happened. This is what we have seen lately in the forex market. And if you look at your DSY, DSY is like a guide that tells you what is actually going on in dollar. If you look at the DSY, look at my levels in the DSY. Let's go to the daily time frame. You'll be able to see what is going on. The market is on a rally, impulsive retracement, impulsive, aggressive, breaking this level like the neckline, came down. Now it has retested it and it has dropped. So this shows that DSY is on a bearish mood. So if DSY is bearish, it shows that dollar is not strong. Dollar is is not strong. People are selling off the dollar. And because people are selling off the dollar, we are expecting that Euro USD, GBP USD will all buy. But I'm not going to that today. But I just want to help you to guide you. So the technicals, the fundamentals is showing, is telling us that dollar and gold is strong. The technicals from the DSY is showing that dollar is weak. These two put together will tell you that gold is supposed to be going up. And if you look at the gold chart too, the news that came out that favored the dollar is not much, is not doing anything. All the sell-off that gold had, gold has regained it. So that should tell us that, okay, the market is going to buy. The buy is continuing. And if you can see the bounce off in this area with a strong engulfing candle, it's showing that yes, gold is recovering from the crash that happened during the Fed chair election, and then it's coming back to that level. So my prediction for gold, if gold breaks this level 5,100 per ounce gold, the market is coming back to its high at 5,600 per dollar. Per ounce gold in dollars. $5,600 per ounce gold. That is where I'm predicting gold to come to. That is the next level gold we come to. So guys, this is a sharp video. I say let me show you what is going on for those of you who want to trade gold. So let me share my screen right now with you guys. So guys, thank you very much for staying through to this video. I think with this information, this little information I've given to you guys, you'll be able to understand how to trade gold and then make some molars, enter some good trades that will change your account. Gold can actually change your account, guys, but you have to be careful and you have to trade it the right way. Then you will be on profit. So guys, thank you very much. If you like this video, please kindly give us a thumbs up, like, comment, ask questions. We'll be able to explain in the comment section, and then please subscribe to this channel and share this channel, share this video to your friends. For those of you who are struggling, those of you who have been trading gold, who resonate with what we just said in this video, you will understand, you appreciate the video more. Please kindly share and then subscribe to this video. We are coming back to give you more of technical analysis that will be backed by the fundamentals. Thank you very much. This is Living on Forest. I'm trying to sign out right now. See you in the next video.